Welcome back to Your Finance TV for a short trading week. Easter sort of snuck up on us, didn't it? We're here, though, to give you a look at the week ahead for the markets, and we're going to be digging into, does last week's rally have further upside? Who could TikTok, is the rally in Bar justified? Who could buy TikTok in the US? We've got an earnings preview for Constellation Brands, and Love It, Like It, Leave It has an Easter theme this week. So you're going to have to hang on to the end to listen to that one, but it is a doozy. Brendan, welcome back to Your Finance TV.
Hey, thanks for having me.
Oh, always a pleasure. All right, before we kick off, like cutting oil forecasts, but before we kick off, don't forget to click on that subscribe and like button below. They all really help, and the numbers are growing very quickly. All right, let's jump into the show. Wasn't it nice to last week have that wonderful feeling of like there's not a small bank that's going to potentially go under? It really felt like it was a catch your breath sort of week. As we start the new quarter, focus will remain on interest rates and if they hike again, pause or cut. This week, we'll have a shortened week with the markets closed for Good Friday, but we will see the JOLTS number Thursday, and that could be the tune for the rest of the week. Brendan, the main US indices were up over 3% last week. We looked at the charts last week, and I said that it felt like a bit squeezy. Does last week's lack of news and moves give you confidence as we move into the second quarter?
So last week was an interesting week. We kept looking for the squeeze, and it just never sort of happened. It seemed to be a chase, if you will. We look at we look at daily movements various ways, but this couple indicators that we look at, one is called momentum, and another one is squeeze, and these aren't revolutionary indicators by any stretch of the imagination, but they showed that price momentum was off the charts, but it was very methodical. So, like, if you're being squeezed, there's no methodical to anything. You're just covering. You're pressing buy, or sell. You're pressing buy. You're not getting squeezed on the downside, but you're pressing buy, and we think. I mean, I'm guessing that buy probably occurred about a week or two ago, right after the rally off the lows from the banks, because everybody expected the world to come to the end. And as we rolled into the last week of March, the world didn't come to an end. The markets didn't fall, and that momentum continued up. So there's a lot of people that probably like you see in money markets really, really high right now. So people aren't invested in funds. You're probably guessing that the funds are probably invested in money markets as well, because they got to put the cash somewhere while they're waiting to move it. And then all of a sudden the month snuck in, and they're like, oh God, we can't be at 10% cash. Maybe we have to be at 5% cash and load it up with the FANG names. So as we all know, those eight names of NASDAQ drove a lot of the market movements. But it was interesting that the returns dispersed a little bit within the S&P over the course of the month, where you had, I don't know, it was like 30 stocks at 20% returns with the S&P, which argues then with the S&P only up 5% for the year, that argues that there were several still down 20%. I mean, nobody talks about that. Anyway, so I would just say that heading into the next quarter, this is a strong month of the year. We still believe, I'm still under the belief that we're in a longer term bear market, but the Fed injected cash into the system 3 weeks ago. It's not leaving. It's going into the base, and the base is back to pre-hike rate levels. Our models are at their best levels since I would say early March of last year, and that was a whole almost 2 months before they started hiking. Well, guess what? The S&P was rising at that point up to 4,700. Like a lot of the indicators argue that we're not supposed to go higher, but when you inject money into the system, you add risk taking into the system, and you add the chase. This is what you get last week. So I don't know if it's a squeeze. I think it's a chase. The news is quiet, so we're not really getting any news. Banks aren't failing. You almost wonder if SVB was a one-off for the time being, sort of like we all thought with Bear Stearns in 08. But then it turns out to be problems behind the scenes that we'll probably find out several months from now. So the question is that are asking now is, with the money being injected in the system as much, is inflation coming back on the radar within a month or two? Because every time money has gone up in the last 2 years, we've had an inflation storm. And I unless the Fed removes it, which I don't think they have the guts to do. Like, this is the whole thing about the fork at the beginning of the year we talked about. Will they raise money? Will they cut money? And if they raise money, they're just going to make the inflation problem worse. Well, looks like the inflation problem is probably going to come back later this year. Commodities are sinking. but service inflation remains strong because those who have money are spending it. So long term, it's a strong rally within a bear mindset, but these things can extend just like they did in different times in history.
Yeah. All right, let's move on to the next one. Jack Ma's been seen back in China. Apparently, all it took was for Baba share price to rally 17.5% last week for him to come out of hiding. We could talk for hours about China's love-hate relationship with the private sector and reasons why Jack has been hiding. But I want to talk about the reason behind the big move last week. They are planning on splitting the company into 6 separate companies, and that will allow the divisions to operate independently and potential future IPOs. Every banker was crying tears of joy on the back of that prospect, that's for sure. Seeing short-term success with their share price, it won't be long until we see companies looking to do something similar. If they're big enough to be able to do that, though. But Brendan, it does beg the question: if you break up a ship, does it mean that it'll still be able to float?
That's pretty good. I'll say this: we heard all of this in front of the congressional hearings, 2 years ago. We were probably talking about it. Let's break up the big tech, Meta, Facebook, all of them. So at the time, it made sense because I thought, you know what? I mean, if Facebook splits off Instagram, that's a huge company in itself. If Google splits off YouTube, that's a huge company in itself. But the question, and that would open up synergies. Like Google, I've always thought that Google was an undervalued company because PE it's been generally lower than the rest of tech for such a long time. So if you split up Google, I think it could operate independently. It's got several different units that could operate. Facebook probably could. I mean, we get WhatsApp and you have Instagram. Sure, you can split up, but what happens to Facebook when that happens? So I think that you might see splits. I think that companies have realized that there is more synergies than we believe to some of this. Investors are going to want to see splits. You're going to see the activists like, oh, you got to split things off. But if you look at Microsoft, for example, they've done better in the last 5 years since they merged all these units together. They've benefited from LinkedIn. They've benefited from the cloud. Do you think Amazon would want to split off the cloud because it balances out their volatile retail like volumes? Like the cloud is literally a accrual dividend that Amazon has to offset all the volatility of retail. So I'm thinking that this thing in China now, Baba, can it do 6 pieces? I don't think it can, to be honest. I mean, I think they're going to find one of those 2 pieces. They're going to IPO it, and then it's going to go down to 0 because I think it probably needs synergies. I mean, of course, the Chinese government could buy it, make it a unit of the state, and then who knows what happens from that. But I would just say that this is not going to. I don't think this will be a major trend at this point. I think a lot of companies they see more synergies. If they break companies apart, that argues they have to go hire people. That argues they have to do other things to make these synergies work. And I mean, like Google split the 2, like Google and Goog, but they have a lot of cool things they could split out. But do you think they're making any money surveying the floors of the ocean? Probably not. So that unit's not going to make money on its own. So I would just say that I don't think this is going to be a trend at this point. I think the dynamics have changed in the last few years. Hiring is harder. Wages are higher. The cost to really run a company separately is probably more expensive than together. And I think like Apple will never split off because it's all about the ecosystem at Apple, and you need the iPhone to drive the ecosystem. So I think it's a one-off in China. I just don't think you're going to see it everywhere. And I think this is strictly driven, like they want Ant Financial to open up. They want Ant Financial to go IPO forever. And they couldn't do it. So this is one way to do it. Get Ant out there, and who knows? I don't know if they're all Pesos 5 though.
Yeah, I think the timing of Ant was a little bit rough. I think just when they started cracking down on all of the US listings of Chinese companies. So I think that sort of put like a kibosh on that but that would probably be back at some stage, I would have thought.
Yeah, I mean, was Ant like PayPal? So
yeah, to a degree. They're a bit bigger than that though.
Like PayPal had its run, and PayPal sort of backed off. I haven't looked at PayPal chart in a long time, but I know they peaked at some point a couple of years ago, or last year. And I would just, it's an interesting thought. It's like yesterday's news. They should have done this 2 years ago if they wanted to start splitting companies off. Like Google, I still think could do it. I don't know if YouTube could survive on its own. It's a social media outfit. I guess that's the big question. But like I don't see Microsoft splitting off its units. It doesn't make any sense. They have pure synergies between their items. And Apple again is all about the ecosystem. They're not splitting anything off. They need the iPhone to drive the revenue so they can spend it elsewhere. So I think it's yesterday's news. I think it's an old story, so to speak.
Okay. It's interesting you mentioned social media because I want to talk about TikTok. We've seen what's been happening with TikTok in Washington, and it seems inevitable it will be shut down at some stage in the US or the parent company will be forced to sell. I'm not sure who could buy them though, Brendan. It's not Meta. Google maybe, but it would face regulatory hurdles. Snap can't afford it. So who could it be?
So I'm going to take the other side of this, and I'm going to say nothing's going to happen here. I think this is the Trump political play all over again because Trump's all about bluster. We're going to shut him down on September 1st. Nothing happens. We're going to shut him down on after the election, November 30th. Quietly went away. I think this is a political play. I don't know what the angle is just yet, though. Biden, I mean, the inflation has sort of come in. It's still a problem, though. So maybe you got to find something else to patch that up. Now you have energy issues like OPEC's news overnight, where they're going to cut barrels, and why not? When it's $65, I'd cut it too. But aside from that, I think this is sort of like a band-aid to cover something. TikTok's simply too expensive to buy. Like, who's got $50 billion to spend on something that's this divisive? But at the same time, why would you shut it down? It's got 100 million views. It's got every kid in the world looking at it. It is this generation's like incubator for social media. Like kids go on there and do their thing, and then I just I think this is a Chinese. I think this is not. I think this is a political band-aid of sorts. I think it's part of the Chinese battle with Biden. I think he's just trying to hide the facts that the economy's not performing evenly. Let's put it that way. And they can't get anywhere at technology. Technology may be getting stronger. Maybe technology's winds are working against them. So let's go shut down TikTok again. I just don't think it's going to happen. Nobody can buy it. Nobody can shut it. Nobody wants to shut it down. The uproar about shutting it down, they'll just find another way to get it out there. So I'm going to say this is a nothing done story. I just don't see it happening. It's just too many factors. If the company was worth Snap's value, maybe somebody could take them out. But $50 billion is a huge pill to swallow. And even Elon Musk is not going to spend another $50 billion. He just spent 44 on Twitter. So he's not going to spend another 50 on TikTok. So I'm going to go with a nothing done at this point on this.
Okay. All right. Well, let's move on to earnings. And it's going to be obviously a very quiet week for earnings. But one name I did want to look at is STZ, Constellation Brands. And they report on Thursday pre-market. Brendan, analysts love this stock. 0 sell recommendations according to Bloomberg, 7 holds and 20 buy recommendations. But maybe not all is well, as analysts have been trimming their EPS and revenue estimates into the lead up into these numbers. Consensus EPS is 184 and revenues are 2.02 billion. But they rarely miss estimates, missing only once in the last 8 quarters. Minimal short interest in this one as well, Brendan, at 1.43% of the float. What do you think we could see from these numbers?
Yeah, I was looking at the analyst reports. They sandbagging up this quarter. My God, like they're saying wine and spirits are going to sink. They're saying beer is going to be an issue. I don't think this is. I think they're going to surprise to the upside, and I only say that is because those who have money are spending it. People are going out. If you go to, like, we have a place around the corner called Game Time, which is just a small, like Duggan, what's it called? What's that game center place called that is
Dave and Buster's?
Dave and Buster's. So the Dave and Buster's like mini ones popped up all over the place because Dave and Buster's so big, and we got like 7 different ones in the state around here that are competitors to Dave and Buster's who do just fine. Well, the one down my street was a bowling alley, and now they do axe throwing and a couple other things. But it was never full. It was always like, busy, a little bit busy. Bowling nights, Thursday and Friday, fill up the alley. The thing's been busy like crazy, nonstop for 3 weeks. Packed parking lots, parking everywhere. I have to believe that spirits it's rising. I know that a guy I talked to who works for Bud, he says everything's been uneven. It hasn't been rocking and rolling. But if this one establishment is any reason, and we're not a rich town, we're like a middle class town. People that have money are spending it, and I wonder if there's an upside surprise coming to all this sandbagging from the analysts. I like I at our hockey party that we had, year-end party. My gift was a bottle of whiskey. Like the alcohol just keeps coming. It's just it's I think there's going to be a surprise here to the upside. Now, with that said, they're dealing with inflation costs that are coming down. So if you look at the CRB lately, and metals prices and aluminum and all of the industrial metals, they've all been coming off for several months. So I think from this company, you might see a profit margin, operating margin hit in the background. But going forward, they might say we're more optimistic about operating margins because costs are coming down. Now, I don't know what they're going to say about wages, so that could offset it. But I think there might be a sort of an upside surprise here. The stock's performing well into the number. They sold it off about 3 or 4 weeks ago, probably thinking that things would be weak. Maybe that's when the analyst downgrades began or the analyst sandbagging of it began. But the stock over the last 3 weeks has turned up. I think that people are sniffing better forward guidance. I think that might be what it is. And I think, again, they may not beat, but I think the guidance forward will be what changes it. So consumer spending over the last several weeks has popped too. So I think something is going to be better here. I mean, I don't know. It's just alcohol seems to be everywhere. If it's everywhere, people are spending it, and it's just I'm getting bottles of whiskey left and right these days. The stuff ain't cheap. So anyway,
lucky you.
I guess so. I get too much whiskey though. I like whiskey. I just don't like it that
much. All right. Well, let's move on to the last segment. I promised a little funny surprise one for you. Love it, like it, leave it with the Easter Bunny theme. Are you ready, Brendan?
Let's go.
All right. DLTR, Dollar Tree. Great for the Easter Bunny to grab those small little gifts for the baskets.
I like it. It's crawling over the 65-week MA. Breadth's improving too. So if you were a seller, you might do it here, but I think momentum is building. So I like it.
All right, let's hop into Hershey's. No brainer for the Easter Bunny to drop into the factory for some extra eggs.
I'd like it. It broke out past 241. It's on fire. The stock's rising well into Easter. Breadth also broke out. Just as a comparison to what we just talked about, STZ, Hershey might be a leading indicator of better things to come from those bigger manufacturers.
Okay. FLWS 1-800-Flowers. Now, if you are visiting family or you can't visit family, make sure you send those flowers.
Like it. Broke out above 11. It's got a long wick in the candle, so people aren't believing it, but like it for now.
Okay. Visa. Easter Bunny's credit card's probably going to get a bit of a workout this week. So what about this one, Brendan?
Like it. Closing at 226 is good resistance, but like it for now.
Okay. BJ's. Maybe we'll run into the Easter Bunny there, or you are heading there for some goodies for Easter dinner.
Leave it. Hit resistance at 78 about 3 or 4 weeks ago, and it hasn't been able to reclaim it. So I leave it.
And this one, I had to do some digging for it, but HSIC, Henry Schein. Maybe you're going to be making some dentist trips after all those Easter eggs.
I haven't looked at Henry Schein in years. Like it. I had a nice turn off the 65-week at 78, and then it broke through 20-week last week. So momentum's building. Maybe everybody sees the dentist coming.
Listen, Brendan, thank you so much for the show today. Have a fantastic week and a great Easter, and have some great times with your family.
Hey, you too, and happy Easter to everybody out there.
And for everyone else out there, good luck investing.